Hello, everyone. Welcome to the stock-specific class here for Thursday, October the 28th. As we take a look at the direction alerts, not too much has changed since Tuesday. We are still dealing with kind of a tired market with sentiment being above momentum, being above breadth. One thing to point out is that, and we'll see it here in a second, is breadth is really lagging. That's telling us that there's not a lot of stocks that are participating in the rally, and that is a little bit of a warning signal. It's not one that you're going to panic over or anything like that, but it is one that we want to pay attention to. Momentum is backed off a little bit from yesterday's kind of pullback, although we had a little bit of a mixed market yesterday, but we're close to that extreme level, but we're not quite in it yet. But you can see right here where breadth is really lagging. It's still been in this trending area. It's moved a little bit to the right side of it, but then it's backed off again. It's just telling us that there's just not a lot of participation in the rally. And then sentiment is still high. It hasn't moved into the extreme area yet, but it's just been in that elevated area. Again, this means that that there really isn't any fear of a sell-off. And even it remained high through the last little pullback, which tells me that no one was really worried about that sell-off, that it was going to end up being anything more than what it was. Now, again, I keep warning that eventually what's going to happen is that we are going to have a sell-off that does panic the market. Almost every market, big market correction or crash starts with the trading crowd not expecting it and not feeling like it's going to be that bad, at least initially. And then that's what creates that panic selling, is when they realize that it's much bigger than they thought. But again, we're not there yet. We'll just keep an eye on that. Now, when we look at the individual charts, let's skip ahead to the charts here. The S&P, we broke out to a new all-time high right through here. And what's interesting is that we broke out. We had actually that bearish reversal day on Tuesday. I pointed that out. I remember I pointed out not only did we have the bearish reversal candle, but we also had the VIX that was up. So the market was up and the VIX was up. And I told you, anytime you see that, you want to pay attention. It tells you that traders are buying, but they're also hedging as they're buying. They're buying protected puts as they're buying, and usually that's a sign they don't trust the rally. It's not too surprising that the very next day we had a sharp little sell-off, quick sell-off, but it pulled right back. Now it pulled right back to the breakout line, and then now we're up again today. So we'll see if that was just a little pullback here. That was a little correction. We had this big run up, so we were due for a correction. So when we put all that together on Tuesday, we had a market that was a little overextended, gone up a little bit too far too fast, had a bearish reversal candle, had the VIX that was up. Again, if you can learn to recognize those little subtle clues, they can help you. Now, again, this looks like it might just have been a one-day pullback, but it was warning of that potential. And again, these things can give you that little edge to help you in your trading, whatever trading decision you want to make, whether you want to tighten up stops or get out of positions or avoid a new trade because you're seeing those signals lining up. These are things that you want to start getting good at recognizing, so that you can make those better decisions. Now, again, we've rebounded today. Now, as we know, with corrections, sometimes you get that false rally. That wave B is kind of that sucker's rally. So it's possible that maybe this was a wave A, and this is kind of a sucker's rally for wave B, and we have another move down for wave C. I'm not saying that's going to happen, but whenever you have the first sell-off, and then a rebound from it, knowing how ABC patterns form, I'm always naturally a little suspicious of that immediate rebound. It's called a sucker's rally for a reason, and so you want to kind of pay attention to that. Now, when would it not be a sucker's rally, or when would it not be a wave B? Well, if it can rally back up to a new all-time high within the next few days, obviously that's not going to be an ABC pattern. That was the pullback, and we're back to moving higher again. So we probably need a little bit more confirmation on that to know for sure. The other indexes, hold on here. I have to. Hold on, my Traders Pro is locked up here. Let me log back in again. Oh, there we go. I think we're okay. Just a little slow here. Let's pull up to the Dow chart. Dow had a little bit of a bigger sell-off yesterday. It too, though, had broken out to a new all-time high. This sell-off dipped back below that a little bit, but we're rebounding a little bit today. You have a little bit of an inside candle, inside day right here, where you had the big down day, and then you opened higher and you're trading higher than where you opened, but you have that bullish candle inside of the larger bearish candle. Usually this is a little bit more of a stronger bullish reversal when you've had a larger decline. This is just we're still near a top right here, so that would be less effective as far as saying that this is really I wouldn't necessarily say that's overly bullish, just in the context of where it's taking place. But if the market had been declining for several days and you had this type of price action where you had the big down day and then you have the bullish inside day, that is a pretty good bullish reversal type signal. But we'll see. We'll see if this is leading to a market moving higher. Like I said the other day, we did have a little bit more of a mixed market where I'm trying to remember which indexes were up. I think it was the Dow that was down. Nasdaq was up. S&P was up, and the Russell was down. I think that's what it was. We had kind of those mixed market conditions. By the way, when you have a mixed market, that tends to be, especially if you've had a big rally, that tends to be a little bit more of a bearish signal. Again, not a strong one, but one that tells you that you might be near a top. Typically, the indexes are going to move in the same direction. All the indexes are going to move in the same direction. When you start to see some that are up and some that are down, what that tells you is that money is just moving around. There's not new inflows really going into the market, but there's a lot of just sector rotation, meaning money's coming out of financials and going into industrials, or money's coming out of the medical sector and it's going into technology or something like that. It's just moving around. And because, for instance, the Nasdaq 100 is more of a tech index, Dow is more of a lot of industrial stocks. You'll see, the Russell 2000 is more of the small cap stocks. You'll tend to see it just kind of move around, where some of those indexes will be up, others will be down, and it's just telling you money is just moving sideways. Basically, there's not a lot of new money coming in pushing everything up. And again, usually that shows up near a market top when everyone that wants to be in the market is already in the market. There's not that new money to be able to come in to push everything up. That's why the best time to trade is when there's a big sell-off and when money is coming out of the market. Everyone's pulling money out of the market, particularly big institutional investors, because then when it's bottomed out and it starts to go back up again, that there's always that new money coming back in. The money's on the sidelines coming back in, and it tends to lift almost everything, or at least the majority of the stocks. And so it's easy to trade during those periods of time because almost anything you pick is going to go up in value in most cases. So the problem is, though, is that especially with smaller traders, is they tend to lose everything when the market sells off to where they don't have new money to put in at the bottom to take advantage of the high probability of a market rise, or the high probability that the stock's going to go up in value. So I think that's really important, because these things I'm teaching you as far as recognizing market tops, that's how it's going to benefit you. If you could recognize that, boy, all these sectors, or all the indicators are pointing to a market top. There's danger that the market could start to sell off or pull back. The risk of that additional gain isn't worth the risk of it dropping dramatically. And if you can move your money to the sidelines and or tighten up stops on trades that you're in, then when that sell-off takes place, you don't lose everything. You don't lose very much. And then when it bottoms out, you can get in when there's the higher probability for those stocks to go back up and go up in a big way, and you can benefit from that rise. Now, again, I don't want to make it sound like we can always know exactly when the sell-off is going to take place. We can know exactly when to get in when the sell-off is done. Obviously, we can't know exactly, but we can recognize conditions, and if we get good at managing those conditions, then that gives us the edge. That allows us to avoid the panic and be able to get in when it's ideal to get in after those big sell-offs. Like, for instance, one of the better times I've seen in my trading career to trade was after the COVID sell-off in March and April of 2020. We had that massive drop. In fact, it was the fastest drop the market has made in its history. But what it did was create, it was a no-brainer. It was the highest probability that we were going to have a good rally off of it, and we did. And now we're kind of seeing kind of the topping of that rally. And I'm not saying we're quite there yet, but we want to be able to recognize some of those conditions so that we don't, when it does have another larger correction, we don't lose everything we made during the rally over the last year and a half. So, all right. So the Nasdaq 100, we're flirting with breaking out to a new all-time high. We're right above it, barely above it right now. We'll see if we end up closing at that new all-time high. Now, I pointed this out on Tuesday that what concerns me a little bit is usually the tech stocks are the ones leading, meaning usually it's the Nasdaq 100 that's breaking out to new all-time high before the other indexes do. But we've seen the S&P and the Dow break out already. The Nasdaq is lagging a little bit, so that worries me a little bit. We'll see how that kind of plays out. But so far, again, the trend is still considered up. We're assuming it's going to continue to move up. Russell 2000 had a big sell-off yesterday, but it's back. It's had the bigger rally today, percentage-wise. But again, I keep pointing out that when you look at the long term, it's still stuck in this massive sideways range it's been in, and so we're kind of still right smack in the middle of it. Now, again, if it breaks up or down out of this range, that's going to be very significant. We are going to really pay attention to that when and if it happens, but we're not quite there yet. But the fact that it is rallying back up and it's almost up 2%, tells you that it's a pretty good rally today, and it could obviously continue. And so again, that gives us a little bit of a foundation as we go look at individual stocks. Now, one of the sectors that we've been in, had a lot of trades in the oil sector. Oil's pulled back a little bit recently. In fact, I'm going to be stopped out of another oil trade here in the portfolio. We'll get to that here in a second. But there are still a few that I'm keeping an eye on in that sector. Let's pull that up here. Let's go to the oil energy sector, going to the holds here. Most of these were either in trading or they're in our watch list already. If I'm going to move down the list a little bit, the CEIX, Consol Energy, 97 strength rank. I'll switch this over to signals here. This is pulled back a little bit. Again, I'm just looking at the overall trend. You have your moved up, it pulled back. You had this move up. It looks like it's pulling back. We're still on the trend plane right here. We're really close to that. So I'd expect it to start to move up in this area here. You're also near the breakout area from over here. This is a critical spot right here. You'd like to start to see it start moving up from that. Now, again, we're not trading this, but we're going to be putting in our watch list to wait for it to start to see if it can start to move back up. So I'll add that one in. Add it to the watch list here. And we'll put alert. Tell us when it goes from hold to buy. I can't tell if it's my computer running slow or if it's the site that's running slow sometimes. Because things are running slow, I'll tell you what, I'll add in those alerts later. Here we go. I can add this one in right now. I just want to make sure we can get through everything without having to wait. All right, another one in the oil sector is Ring Energy, REI, 97 strength rank. And again, I just like it's been consolidating a little bit right here. And the oil's been on a pretty good run. And so the fact that it's pulling back a little bit is fine. In fact, even the trade I'll be stopping out of today, I'm stopping out because that's what my plan was. But it looks to be kind of like a C leg. I'll show you that here in a second. But it looks like maybe a C leg of an ABC pattern. So it could be one we jump right back into again if it starts to move back up. But there's a lot of these oil stocks that have just been kind of consolidating a little bit. And usually that means they're ultimately going to be moving higher. But I'll put that one in the watch list as well. It barely went back to a hold signal. As it kind of dipped back down a little bit right here, we'll see if it starts to move back up and gives us another entry point. Under computer and technology, I was looking at this ANY Here, 3D Corp, 94 strength rank. Now it's kind of broken its little trend line right here, but it hasn't dipped to a lower low yet. This is a little bit of a deeper pullback. The reason why I'm adding this is that I really don't have any, I don't think I have anything to lose here. If it keeps dropping and drops below that support level, I'm not going to be getting in anyway because it's not going to go back to a buy signal. But if it can start to rally from here, this is a pretty nice uptrend it's been in. And if it can go back to a buy signal, it could continue that uptrend. So I'll throw it in there to watch it. Like I said, if it keeps dropping, I don't have anything to lose. I could just kick it out of the watch list, especially if it drops below this support area right here. So I was going to throw that one in. And again, I'll add all these later. Like I said, with the site being slow, I don't want to take up a lot of time waiting. Another one in the computer and technology sector is this INOD, 94 strength rank. And again, this one's barely gone to a hold signal. Has an up day today. Could go back to buy. Now, again, on some of these, the trend is clearly up. The thing I worry about sometimes is that maybe you're getting near the end of the trend. But you could have said that back here. It could have looked like it was near the end of the trend, and then it kept moving higher. So we'll put that in the watch list. We'll see. Again, when I put these in the watch list, it doesn't mean I'm going to trade them. It means I'll evaluate them when they go back to a buy signal. I can't get into everything that I'm watching, but anytime I see a decent trend or pattern, I want to put it in that watch list so I can at least keep an eye on it for a few days. So I went ahead and put that one in. And then one last one here in computer and technology is this MSTR. I think we've traded this one before in the portfolio, if I'm not mistaken. But it's had this big dip down. It's come back up. It's been consolidating right through here. And a lot of times when it consolidates near a breakout area, it's going to break out usually when it takes off. It's kind of that what we call a cup with handle pattern. There's kind of the cup. Here's the handle. So if that can break out, this thing could maybe take off again. So I want to put that one in the watch list. Keep an eye on it. Under the construction sector, I want to look at this AYI. It's an 86 strength rank, but a lot of stocks I told you this before, in some of the sectors, they just have, in the hold section, they typically have lower strength rank stocks. So sometimes you have to look at this from a relative standpoint. Typically, we're looking for right around a 98 strength rank or close to that. I usually don't like to go below 90. But like I said, some sectors they don't have, they have high 80s or low 90s as the majority of the ones that are in those sectors. So you have to kind of look at it from a relative point of view. So this AYI had been in a nice strong uptrend here, had a nice little pullback right here. I don't know if it's done. It is up today. It was down yesterday. It's up today. We'll see if it goes back to a buy signal. We can reevaluate that. But I'm going to put this one in the watch list. And then I found a couple under the aerospace sector. I don't think I've looked at this for a long time. go to the hold section there. And the one at the top right here, 91 strength rank TGI. Again, you've got kind of this bowl-shaped move right here. We're starting to hit the higher lows. And you've got, you have the lower highs right down through here, and then you're starting to get higher highs. So just kind of wait for that to go back to a buy signal, see if it can start to break out and move higher. Again, a target area would be this previous high. So there's some potential upside if this thing can go back to a buy signal. I'm going to throw that one in the list. And then one more in that aerospace sector is this EH, 90 strength rank. And, this one just has been down. It looks like it's kind of moving sideways, but I'm really focusing on this as being kind of a double bottom. And then you've got kind of this bowl-shaped move right here where it's pulled back from. I think if it can break out above there, it could be early sign of starting to move back up. And you have this previous high all the way up here, so there's a lot of upside potential if this has bottomed out. But I'm really kind of focused on, is that a double bottom? It's showing a bottoming process right here. But it hasn't really broken out to a higher high yet. It had the lower high right here. You had an even high right here, and you pulled back. So really, I'd like to see it break out above here. Even if it goes back to a buy signal, I'd like to see it break out above here to get a little bit extra confirmation. But we'll throw that in the watch list and then put that signal on so we can double check it. It's taking forever looking for this to do that. This is the last one I'm going to go over as far as the specific stocks. So I thought maybe it wouldn't be too long to add this, but it's taking forever. All right, a couple things to manage in the portfolio. Portfolio is down. And I think a lot of that is that we have a lot of the oil stocks, and oil stocks have pulled back a little bit. Oh boy, it's kind of rebounded a little bit. I was going to stop out of SBOW. See, on SBOW, it had this little pullback and then tried to rally and it had this drop. It could be a C leg. That could be wave A, wave B, wave C. Now, I had my stop right below here. We're right at it. Maybe I'll wait till the market closed just to make that decision. It was all the way down here before I started class. And so it was a pretty clear decision to go ahead. Well, it seemed like a pretty clear decision to go ahead and stop out, but it's kind of rebounded. And if it could come all the way back up, that'd be a bullish reversal candle. So I don't know if I'd want to stop out on that. So I'll wait. I'll wait on that one. You can see my stop is at 26.50. And we're at 26.47, so we're only 3 cents below that. So I might just make a judgment call at the end of the day on that one. The rest of them are down, but they're not below the stop. So we're still just kind of holding them. It does concern me a little bit that we had the market rally not the last couple of days, but the last week or so, and we still managed to be kind of underwater. But again, when I go through and look at the stocks in the portfolio, they're all just kind of, waiting to break out. They're all kind of moving sideways, kind of waiting to break out. Rig is pretty close to its stop, but it's, again, you got just a sideways move, and it's one of those oil stocks that pulled back recently, but could start to take off again. This is a little bit of a bullish reversal candle right there, so I'll probably plan on holding on to that one. Yeah, see, a lot of these we're just kind of stuck in the sideways movement. But this also is a reflection of what I talked about earlier when I said, and this ties in perfectly, when we look at market breadth, the reason why market breadth is important is because sometimes those indexes move higher, but they're moving higher not because all the stocks in the index are moving higher, but only a few stocks, and usually the bigger stocks within the index are moving higher, and so it's misleading. It used to be Apple would do this. Before Apple had its stock split, it was almost $1,000 stock, $1,000 a share. It was like in I think it was like $700 or $800 or something like that, and it was the largest stock in the Dow index. And any movement that Apple made moved the Dow. I mean, if Apple was up, the Dow was up. If Apple was down, the Dow was down. And it didn't matter. And there were times when almost every other stock in the Dow was down, but Apple was up, and so the Dow was up. And so it really wasn't reflecting the index. I mean, we used to joke that all we had to do was look at Apple to see what the market was going to do, or if the indexes were going to be up or down. But the problem was it didn't reflect the other stocks and what the other stocks were doing. And so this is showing me that same thing right here. When we have a situation where the market's rallied for a week or a week and a half, again, not talking about the last couple of days, but recently, and our portfolio has been stagnant, if not down a little bit, it just tells me that there's a lot of the stocks that we're in just weren't participating in that rally, and it wasn't just the stocks we're in. We can beat ourselves up and say, boy, we picked the wrong stocks, but there's a lot of other stocks out there. And I've noticed this just in my own analysis. I like to look at a ton of stocks every day. I get a better feel of what's going on. I'm all for software programs that scan, and the scans here on Traders Pro are fantastic. And for those that don't want to look at a lot of stocks but just want to find the stocks that are moving right now, it works perfect. But I like to get a feel of what's going on, and what could be going on underneath the surface. And the only way I could do that is by looking at as many stocks as I can, and usually as many stocks in different sectors as I can. And so I've got a lot of watch lists that I go through, and I probably look at about 500 stocks a day on an average day, maybe more than that. But I can start to see it. If I'm going through my watch list and I'm not finding patterns that look like I want to trade. I remember the other day, I swear I went through 500 stocks and maybe found 2 or 3 stocks that had a pattern that I would consider trading based on what I like to look for. That immediately told me that I probably don't want to be trading, because there wasn't a lot of participation. There should be when I know I'm in a healthy market, and a market where I have a high probability of making money, is when I start to go through my watch list and I can't get through 100 stocks because I find 20 or 30 great patterns in the first 100 stocks I'm looking at. When there's so many stocks that look like they're going to move up or or in case of bearish trades, look like they're going to move down. That tells me there's a lot of participation. That's a great time to be trading. That's a great time to be aggressive. There are times when we go through this class right here where we're going through the stock specific class, and there's a ton of great patterns that have a 98 strength rank. That's what we've been looking for. But over the last couple months, we've had to dip down below 98 because there haven't been a lot of 98 strength range stocks that have great patterns. And so is it shocking that the portfolio is down a little bit or stagnant a little bit? No. Now, we can't control that part of the market. The market is going to go through these phases where it's not a great time to trade, or there's great opportunities. Like I mentioned before, and even going back, if we went back and if you go back and look at the recordings back in like May and June and July of 2020, after we had that massive sell-off, man, we had tons of stocks that were 98 strength ranked that had already sold off quite a bit and had a lot of upside potential. I mean, I would go through probably about 10 to 12 stocks. That's all I could fit in during an update. But there were tons of them that we were going through, and they were all, like I said, 98, 97 strength rank. They were right there. So the market goes through different phases, and that's why when I go through the portfolio right here, I'm not worried about being down as long as the patterns still look okay. It just means I've just got to be patient, and that it can reverse when these stocks break out and start going. If they break out and start going, it'll reverse that drawdown very, very quickly. So sometimes it's just one of those things where you just have to be patient. I can't imagine, looking back, I can't imagine what other stocks I would have been getting into, to continue that. Now, I could look at some that I've gotten out of. I got out of Tesla right before earnings because I had a bearish reversal day, and I didn't want to take the chance of going into earnings with a very overbought stock. And we all know that Tesla made that huge jump. That would have definitely, made us a lot of money in the portfolio. But again, that's hindsight. We're all experts in hindsight. What if it would have tanked in a big way? It would have really dropped the account because it would have dropped in a big way. So we can play that game all day long. All right, so ORMP, again, this one still looks fine, and it's just a matter of it's been moving sideways. If it breaks out, this thing should really take off, and we're in kind of a ascending triangle too, where when it breaks out, it should really take off when it breaks out. So again, I don't see a reason to panic on this one. It still looks fine. It's just you're gonna have to wait for it to make its move. AR, again, dipped a little bit today, but it's also higher than where it opened. So it opened right here, it dipped down below right near our stop, and then came all the way back up. It's been moving sideways, been consolidating. This thing should start taking off and should break out higher. Very rarely do you see stocks move sideways like this and then come all the way back down. I have a name for these. I call these volcano tops because it looks like the top of a volcano, or at least how people would draw a volcano. The funny thing is people draw volcanoes like this, but I've never seen a volcano that looks like that. They're always odd shaped. A lot of different looks to volcanoes. I guess when they blow off their tops, they don't all look the same. But they happen. You can have a stock that forms a pattern like this and drops, but they're rare. And because I know they're rare, I have to believe that the stronger probability is that this is just a consolidation and it's going to end up breaking out higher. Now, by the way, with these sideways consolidations, the fact that they typically will break out higher doesn't mean they have to break out and run. Sometimes what will happen is you'll break out of a kind of this volcano top formation. It'll barely break out and then it'll reverse. But at least you'll get that pointy top that is more typical of a topping pattern. It'll be a little bit more pointy, not completely pointy, but usually it'll reverse sharply when it's done. But there's probably a pretty strong probability this thing should at least break out. So I'm not too worried about that chart. CPE, now this one could be a little worrisome. I have my stop down below here. I got in on that buy signal right there. You know, to me, this looked like a little bit of an ABC pattern right here, but it could be that this is a larger ABC pattern where that's wave A, that's wave B, and you get wave C that comes down, in which case I'd get stopped out, and then maybe it takes off again. I still like the overall bowl-shaped move of this and then the pullback from that. My stop is down here, so again, I don't. It's possible. It's still likely that this is the start of the move. It's just pulled back a little bit, and it's going to take off again. But I see no reason to panic on this one, or to expect that it's not going to go higher. SBOW. This is the one that we are real close to being stopped out of, but there again, that could be wave A, wave B, wave C. You know, if that intraday low holds right here, it could be that it was just testing that breakout from back a few months. And again, I'll have to make the judgment call. I mean, we're right at the stop. I'll make the judgment call on this one at the market close. IKNX. Yeah, same thing. Now this is moving sideways a little bit longer than I would like it to. You know, I was expecting it to kind of break out in this area right here, and it hasn't. But our stop's down below here, so if it usually the longer it moves sideways, when it finally does break out, usually the bigger it runs. It tends to really take off of that. This one I would be a little bit concerned with, because I always get concerned with how long. Obviously, that's reflecting indecision. When it's moving sideways, it's telling you the buyers and sellers. The buyers aren't overly convinced it's going higher, so they're not buying more. The sellers aren't convinced it's dropping, so they're not selling. But when it gets drawn out that long, that becomes concerning. Why is it taking so long for them to decide what they want to do, the buyers or the sellers? It shouldn't last that long. That does worry me a little bit. But again, it's not below my stop. And if it does break out, it should really take off. So I'm going to stay with it for now. TTI. Again, it looks to just be kind of in that, you know, it looked like this was the pullback and got in on the buy signal. Maybe that's wave A, wave B, and we're in wave C. A little bit of a bullish reversal day today. We'll see if it takes off from there. I think my stop is down here, so we have a little bit of room for it. But again, overall, I like the fact that it's looking like it's rolling over. We have higher lows through here. Finally had a higher high right there. It's acting like it wants to reverse. It just hasn't produced yet. So that's why we go through and look at the individual stocks. We don't panic at just the numbers when we're seeing that the account's down or the account's up. There are times the account's up, but I start looking at everything. I'm like, boy, there's a lot of bearish reversal candles. You know, maybe I ought to be jumping out of some of these things. So the opposite can happen as well when we start looking at individual stocks. IR, IX, again, we've been moving sideways. Stops down below here. But we have this drop, and now, you know, we have the higher low, higher high. It's just stagnant a little bit right here. Rig, same thing. Again, that's real close to getting stopped out, but it's, again, we had higher lows, higher highs, consolidation into here. Potential that it could get back up into here. And that's what I'm saying is if these things start taking off, it's not going to take very long to get back to profitability. TELL, same thing. ORMP. I don't know if we already looked at this. I think we already looked at this where it's in that triangle formation. If it breaks out, it should really take off. It's pretty close to breaking out. I think that's it. Yeah. So right now we're down. We're at 92, so down a little over 7,000 in the portfolio. We have some cash available, and you know, if we look at the watch list, you know, there were a couple that that I was looking at. This ASAN right here might have given us another chance to get in. It's already at a buy signal, but yeah, I missed it down here because it came down, it started to move back up, started to come down. I thought it was this. I thought maybe this was wave A, wave B, and then it's going to go into wave C. And even when it moved up a little bit higher, I was still worried about that wave C. And then it had this big breakout move right there. And then I didn't want to chase it, but then it broke out a couple of days ago. It pulled right back to the breakout area, and then now it looks like it's starting to move back up. So. I mean, this is one we have some cash. Maybe we should let's go ahead and maybe get into this one. Trouble is probably trying to find a stop for it. It'd be a really tight stop, but maybe I should have a pretty tight stop. Here's the breakout area right here. We'll put the stop down. Maybe we'll put it right down below here, just to give it a little bit of room. That low on that day was 113.09. We'll say 113 as our stop. Yeah, 100 shares would be too much. Let's do 50. 50 would give us the 1% risk, but it's only going to be 6,500. Let's go. What would 75 be? 75 be right at 150 on the risk, right at 10,000. I don't want to go that. Let's go 65. Let's see. Let's go 65 shares. All right, let's go ahead and purchase. How much cash do we have left? We've got 11,000. The other one I was looking at was Blank, BLNK, or Blink, I mean, Blink Charging, BLNK. But this was, did this go to a buy today? I think it went to a buy today. Nope, it's still a hold. All right, I'll wait on that one. I think it was right at, it was at a buy. It must have pulled back a little bit because it was at a buy when I was looking at this earlier, but that's all right, I'll wait. So we'll add that one and then see what happens with that. All right, that's all I have for this week. We'll see what happens next Tuesday. So have a great weekend. We'll see you next Tuesday for the next market update, and we'll kind of go from there. Bye, everyone.